Hey everyone, welcome back to another session for news trading. This is number 2, theory and practice. We are actually going to be doing a few different stuff tonight. But yeah, before we begin, just a quick sound check. Let me know if everything is all right. And then we can go with the theory and practice for news trading. And for tonight, I'm actually going to show you how to do some limit orders, because there's probably a few scenarios where we can actually practice a limit order, which is something that is very rare for us to be able to do. But I think the market condition today allows us to do that. So I think we are going to be practicing on those as well. All right. So good morning, good afternoon, good evening, depending on where you are from. It's evening for me, but I hope you guys are having a great day. Okay, my name is Peter in general. Let's get this started with a quick disclaimer. Any opinion discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to higher trading risk and delays in order execution. Be attentive when determining the volume of your transactions and consider all possible risk factors. Okay. So we are going to be showing you the promo code that you can use to double your deposit bonus as per usual, and you should have access to the private Telegram channel. If you register via email, you should be receiving that link through your email. All right, just a little bit about myself. By now, I think a lot of you guys probably know what my experience is, but my name is Peter Njoro, and I've been a full-time trader with actually over 20 years of experience, so I need to kind of fix that. Professional trading coach and technical analyst since 2007, expert in Ichimoku Kinko Hyo technique, and also director at Zenifix, an independent market consulting company. I've also been a guest speaker at the Trading Investing Expos around Australia, Invest Fairs in Singapore, Invest Carnivals in Singapore, as well as the ATA and the APTA conferences, which is the Australian Technical Analysts Association and the Australian Professional Technical Analysts. All right. Cool. So we are going to talk about the advantages and disadvantages of news trading. I think there were a lot of questions about this last Friday when we did the NFP numbers. But yeah, we're going to talk about that, which one is going to create that impact, which is going to be most profitable news for trading. 3 main phases of price movement. This is very crucial because at the end of this month, just to give you a little bit of a glimpse, we're actually going to be doing some smart money concept trading. That series is going to start on the 28th of November. We are going to be using this. This is actually part of that as well. So we're going to go through that. But you need to understand the main phases of price movement, and we'll go through some of the general rules for news trading. We're going to be going through examples of pending orders, the buy stop and sell stop. This is something that we are going to employ in the NFP sessions, as well as the upcoming CPI sessions on the 14th of November, which is next Tuesday. So I think a lot of you guys that has been attending the webinars are probably pretty familiar with the buy stop and sell stop strategy. But tonight and for a very long time, I haven't actually been able to find an example to get your buy limit and sell limit strategies, but there are going to be some trades that we can take a look at and how to actually employ those limit strategies as well. We also go through a few stuff such as trading after the news release. Okay, cool. So this is the promo code that you can use. It's non-farm 2023. This is to double your deposit bonus. This is useful. I mean, it's there as a bonus, right? So if you're depositing, for example, if you're depositing $1,000, the deposit bonus will be $1,000. I think this is actually something that can be applied to your margin requirement as well. But check the terms and conditions. If you want to find out more, feel free to contact the customer support and see what it is. There are terms and conditions on how you can actually withdraw that bonus. But, it's there. Might as well just use it. The code, again, is non-farm 2023. This is valid until the end of 2023, I'm guessing, because it says non-farm 2023. All right. Okay, so let's talk about some advantages and disadvantages of news trading first. I'll go through the advantages. And to me, the advantages is that all the necessary information can actually be found in the economic calendar. So there's no need to delve deeply into technical and fundamental analysis. Now, when we talk about news trading, and I always remind it every month, This is not the same as fundamental analysis. All right. So news trading is a completely different method in terms of how we actually tackle the market. Fundamental analysis, it's slightly more complex. All right. Yeah, you need to kind of get a good understanding of how an economy works. It takes a little bit more time. News trading is something that if you kind of figure out a strategy for it and you know what you should be looking out for, it's something that's a little bit easier to get into. And in terms of the necessity of a technical analysis when it comes to news trading, put it simply, I would say a lot of technical analysis, it's pretty much thrown out of the window during news trading and the market gets really volatile. Would it be good to know your technical analysis? I would suppose so. Yeah. Is that going to make a difference? I think it would make a day and night in terms of difference. But yeah, for a starter, if you want to get into news trading, you have to treat it as a separate method of trading. It's really a mix of technical and fundamental to a certain degree, but it's not as complex to get into. Okay. The other good thing is that events in the calendars are ranked in order of importance. I'm going to go through that later with you, which helps in making adequate decisions because not all events are going to have the same impact. I'll probably go through the events for this week, but this is something that if you've been watching the weekly market outlook that I've been publishing, I ranked it by how important those events are. Some of them are pretty ignorable, but if there are going to be key events in the market, you need to understand when those news are going to get released because it's going to create a lot of impact into the market. It's going to create a very high short-term volatility in the market, and that's basically key when it comes to news trading. We want to be in that short-term volatility, and maybe if you guys are trading or you just started out trading or you've been trading for a little bit longer. The question is, when it comes to trading, what's the difference between trading and investing? As a trader, we always look for that short-term volatility because we want to profit out of that volatility and we need that volatility. As an investor, we tend to avoid the volatility in the market, but as a trader, you are looking for that volatility, and that's how you actually trade the market. Okay, so again, these events are going to be ranked in terms of how important they are. It could be a high impact, a medium impact, a low impact, and some of the data are pretty much ignorable. Okay. Now, publication of statistical reports noticeably increases volatility. This is something I talk about, allowing traders to potentially earn significant profits in that short time period. Now, I'll be frank with you, and I've been trading for more than 20 years, right? I'll be honest. When it comes to day trading, when it comes to trading your market, we actually need to time these events because if there are no events that's going to move the market is super boring and you could actually open up a wrong position because there's no volatility in the market. There's a lot of things that could happen. The momentum could reset. It might not have enough momentum to take your trade somewhere else. So, like it or not, we need the volatility that this news create, and that's basically how we actually trade intraday or as a day trader in the market. It can be any market. It can be in the forex market. It can be the equity market, commodity market. There's a lot of options. You're trading with Octa. There's a lot of options with Octa. You can actually even trade CFD equities as well. Just to let you know, because I think a lot of Octa traders doesn't know that you can actually trade some of the equity CFDs as well. Okay. Now, the next thing to me that's a bonus is the simplicity of a strategy, right? You basically need to know how to open and close those orders without the need to learn any complex formulas. And that's what's the point of this second webinar during our news trading, is to show you the strategies are pretty simple. A lot of this involves the limit orders and the sell stop orders that we are going to be creating today. So once you master how to actually create a pending order, that's pretty much it. It's about 50-60% of what you should be doing for news trading anyway. Okay. The last advantage to me is the minimal time expenditure on trading. As I said, it can be boring. When we look at the market, you could be staring at your monitor for maybe 12 hours straight. All right, if there's no news, the market's not going to move. But if you know when this are going to happen, You know exactly when to access the trading platform and what actions to take. Moreover, the trading process itself can be completed in just a few minutes. And this is something that we've done every month, right? During the NFP release, during the CPI release. I didn't talk about complex technical analysis with you guys during those releases. You know why? Because we don't actually have the time for that. I have about maybe 20-25 minutes max to talk about the theory. And then within that 5 minutes window before the news gets released, I set up my orders. And that's how it is. There's no complex analysis that's going to take a long time for you to figure out, right? And I don't need to talk about those complex technical analysis or the more advanced levels. But yeah, when it comes to news trading, it's pretty simple. If there's a breakout of a certain range, you want to be in that breakout. It's as simple as that. That's kind of the logic behind news trading. Okay, so those are the advantages. What are the disadvantages? Obviously, I can list more, but this is 3 that you need to kind of figure out, right? So the market situation doesn't always develop as predicted by logical thinking and common sense. What does that mean? It basically means if you're expecting a number to be bad, for example, to the US economy, and the number comes out bad, right? It comes out really negative, but the market sometimes doesn't react to it because there's a weird logic in the market, right? People say, buy the rumors, sell the fact, right? So there's something that we call pricing into the market. And if the market has already priced in what that data is going to be, when the data gets released and it meets market's consensus, sometimes it could actually reverse. This is the case for this week. Again, I've already published the outlook for this week. If you missed it out, look out for the outlook for the 6th to the 10th of November. The case for the RBA interest rate hike of this week, right? RBA increases interest rate the interest rate in Australia, but the Australian dollar actually fell, right? It's supposed to be good for the Australian dollar, and that's kind of the logical thinking. But I mentioned this, that market could be pricing in when it comes out and it's as what the market expected. There's an increase from the RBA. A lot of them will actually take the opposite trade. So sometimes a logical thinking or what do you think should be the common sense doesn't quite apply. And this is probably where the knowledge of understanding fundamental analysis would help you when it comes to news trading. Okay, so but to me that's a disadvantage, just because to a lot of traders that's probably not familiar with how the economy works, how pricing in the market works. This could be problematic because there's an interest rate hike, but it didn't actually boost that currency. The market would actually do the reverse. Okay. Now, the other thing that I've always been mentioning, not all news can cause significant market reaction. So you really need to filter out what news you should be monitoring, because, if you're anticipating a lot of news, for example, I can talk about the news today. Okay, let me just bring this in for a little bit. And, we are expecting the U.S. initial jobless claims to actually move the market. This is at 8:30. But the news... following that, we've got Bostic, we've got Barkin's pitch, which is this week is basically a week of a lot of commentaries from the central banks around the globe. The ECB has commented, and it causes a little bit of a movement in the euro. But, to take a look at this too, like one for Bostic, and then 2 hours, 1.5 hours later, it's going to be Barkin. You kind of need to figure out which one is actually going to move the market. Barkin's probably not going to move the market a lot, but Bostic's comment, yes, that's going to move the market. Okay, so let me just put this aside for now. Okay, and so you need to understand, not all news can actually cause significant market reaction. Sometimes it doesn't create a reaction. Even a high impact news sometimes doesn't create a reaction as well. So that would be a disadvantage, just because you need to understand a little bit more about the fundamental analysis. Now, the other problem is that if you're unable to accurately guess the market direction or analyze the situation incorrectly, you may experience significant losses, because you are picking a side. You're basically picking a side in a market. When I do the NFP and the CPI numbers, I actually do not pick a side. So that maybe we'll do that later tonight. But I don't like picking a side when it comes to news trading. I might have a little bit of a bias, but I don't like to pick sides. I'll let the order happen, and then it kind of dictates which direction I should take in the market. And that's basically what we do for the NFE and the CPI. But a lot of traders, once they start to get into news trading, they start to have these expectations in the market. Like, for example, the RBA interest rate hike this week on Tuesday. Oh, that should move the Australian dollar up, right? Maybe you take it on face value and you bought in on the Aussie USD, but the market kind of went the other way, and if you don't have a proper risk management, it could really create a significant loss for you. So just keep that in mind. Okay, it can be beneficial, it can also be destructive. So that's how I would look at news trading. Even though it's easier, I wouldn't say it's easy, but it's easier compared to spending time figuring out technicals, taking time understanding the fundamentals. It still poses a risk, right? So it might be easier, but it doesn't mean that it's risk free. Okay, cool. Just excuse me for 1 second. Okay. So yeah, those are going to be the advantages and disadvantages of news trading. Right. So let's talk about the most profitable news for trading. So basically, I would say all news is divided into two categories, and the month of was it November? The month of October it's something that kind of plays into the market as well. So we have some hot, unexpected news. It could include terrorist attack, military conflicts, which is something that we saw in the month of October, natural disasters, right? If you guys remember the tsunami in Japan, when was that? Was that 2011, right? It is 12 years, 12 years, all right? It's part of a natural disasters. It's totally unexpected. It caused a little bit of a ripple in the market as well. Now, during such times, typically, national currencies become stronger as investors get rid of stocks which are about to fall. This is in general terms. But how it's going to impact the market, it impacts the market in a different way. For example, the military conflicts that happened in the month of October, it causes the Forex market to kind of stay flat for about a week or two. Okay? But commodities like gold, safe havens like gold, safe havens like the dollar, the Swiss franc, that gets supported. Okay, oil, because the conflict right now has a lot of risk for oil, it pushes oil prices up. But as the conflict goes on, you can see right now oil prices have come back down. Okay, so those are going to be hot, unexpected news, and this is what I would say. Or what I would call more of a systematic risk in the market, right? A systematic risk is risk that you actually do not have control of. It is actually part of a market risk, okay? So these are going to be a hot, unexpected news. Now, the one that we focus on for the news trading sessions are going to be a periodic news that comes out regularly. It includes the following reports, such as companies' earnings, right? And everything related to them. If you're trading the stock market, and Octa does offer that as well. So if you're interested in looking at the stock market, you kind of need to figure out when the company earnings are, because they are going to move that particular stock. But if we talk about the Forex market, central bank meetings and monetary policy decisions like interest rate decisions, that causes a lot of reaction in the Forex market. Okay, quarterly GDP reports, that's going to create a movement in the market as well. 3 weeks ago we had the US quarterly GDP reports that definitely moved the market. Inflation numbers, you got the CPI, which is going to be next Tuesday, and we're going to be trading that live as well together. PPI, we can take a look at the core inflation, the personal consumption expenditure, inflation numbers. That's definitely a focus for a lot of traders as well. Indices of business activity in the manufacturing and services, the ISM manufacturing, the flash manufacturing and services PMIs, those are going to affect the market. But this one, it doesn't move the market all the time. So, okay, so for sometimes the PMIs really depends on when we need it and how we actually need those data. Sometimes if the market doesn't need that data, it typically doesn't create a lot of ripple in the market as well. Okay, unemployment numbers, which is last Friday, we did that for the US, which is the unemployment rate as well as the non-farm payroll and the average hourly earnings. Those are going to move the market as well. Okay, but those are going to be a periodic news, and these are the news that we want to focus on. Okay, there are questions about how market has been priced in. If we have the time for it, I'll try to answer that for you. Okay. All right, so let's take a look at the main phases of price movement. And if you're asking about how the market is pricing in for it, this kind of falls into this category as well. Now, number one, we have the accumulation phase. And this is something that we want to tap into with the new series that we're going to be doing with the smart money concept, which is going to start on the 28th of November. I'm just going to keep repeating it because I think it's going to be a waste if you guys missed it, because it's a really good understanding of how the bigger order flows happen, right? So we've got accumulation phase. Now, the most informed and forward-thinking insiders enter here, and the word is insiders. So I would say with the accumulation phase, maybe about 5 to 10% of retail traders are going to be in that accumulation phase, okay, right now. And that's basically just the way it works. In terms of the amount of money in the market, I think about retail traders, it's probably going to be a small percentage. The most informed and forward-thinking insiders are going to be entering here. So if you're thinking the market is pricing into something and you have that knowledge, you have that information, you have the capability for that research, a lot of them are going to be in this accumulation phase. Now, during the accumulation phase, this is where the big funds are going to enter the market. And they need to do that because the position size that they have in terms of volume is a lot larger than what we do as a retail traders. It takes time, okay? It takes time for their orders to be filled. So if the market goes in a sideways market condition before a news event get released, this is what we consider to be the accumulation phase, okay? And then we have the participation phase. Now, the technically driven traders will enter here because they know how to use the trend lines. They know how to use the technical analysis tools. This is going to be the participation stage, okay? So the accumulation stage, what happens here is typically the big funds, the analysts, the professional traders, they're going to be in the accumulation phase. The participation phase is where a lot of the other traders comes in, right? If you're looking at the market through technical analysis, this is probably where you come in. This is also where some retail traders are going to come in and they're going to start moving the market. And then we have the distribution. The public will enter here by receiving outdated information. Okay, so you do not want to be in that distribution phase. Okay, because if you jump in during the distribution phase, it might be a little bit too late. So what we're trying to do with this whole news trading webinar is for you to actually position yourself in the accumulation phase as well as the participation phase before the market starts running up. Because when the market starts running up, you open a position. That's where people that accumulated their positions want to get out of the positions. Okay. So in the final stage, in the distribution phase, and the reason why it's called distribution, smart money begins selling their positions to the less informed investors, leading to a potential reversal. What happens during distribution is when the smart money starts sending out signals into the market and say like, hey, this is a good time, this is bad, this is good, right? And I'll be honest with you, if you read a financial a website, for example, a financial news outlet, you are receiving that information a little bit too late, okay? Because the market reacts during the news releases. It will take time for an analyst to go through that news release, figure out what's going on, and then write a publication for the news outlet to kind of publish to everyone else. So by the time you read it on CNN, for example, or CNBC, or Bloomberg, or even Reuters, it'll be a little bit too late, because those are going to be outdated information, and a lot of traders that has a lot of positions typically get out at this phase. Okay, so you really need to understand what it is, and we'll talk more about this in the news series that we are actually going to be doing on the 28th of November 2023. Okay, so let me give you a few general rules for news trading. You basically need to study the market and analyze the dynamics of a currency pair or whatever assets you're looking at. Okay, so you need to have a little bit of an understanding of what you're trading, and you should be able to analyze a little bit at the very least, right? It'll give you a little bit of a heads up. Now, access the reaction of a currency pair to that latest news or any assets, right? It doesn't have to be a currency to that particular news. What do you see? Is the news bad? Right? Is the news bad? Is the market going the way you expect it to be, or is it going the other direction, which doesn't make sense? You need to be able to figure that out in a very short period of time. Now, prepare for trading by marking relevant levels on the chart. Tonight, in 1 hour's time, we're going to have that weekly jobless claims from the US. After a disappointing NFP number last week, this is going to be a market moving event, because if the number is bad, it will confirm what happened last week, that the data was correct, the information is actually going to be bad. So we have that in 1 hour's time, and we are going to be using this session to mark out some of the levels. We'll probably take a look at the Euro USD and gold as well. I think there was a request for gold. Okay. Now decide on the trading tactics, right, including when to open and close the orders. There are several ways to do it. There is a specific method to do it for the NFP trades. We always discuss that every month during the NFP session. So you kind of still need to get a hang on what you should be looking out for the NFP and for the CPI, because they're both market moving events, but the market reacts differently to the NFP numbers and the CPI release. So you need to have a different set of strategy for the two of them. Okay. Then you need to choose an appropriate trading time frame. If you're looking to trade the news releases, right? Like what we do for the NFP and the CPI, we typically get in and we typically get out within the first 15 minutes of opening that trade. Would it make sense if I want to stay in the market for 15 minutes and I'm looking at the daily chart or the weekly chart? Obviously, it doesn't make sense. So I probably would go on the 15-minute time frame or the 5-minute time frame to figure out, how should I position my orders. Okay, so you need to choose an appropriate trading time frame. Now you need to also determine the maximum risk for each order and consider using stop losses and maybe trading stops. Okay, personally I don't use trading stops, but a lot of traders find trading stops useful. Okay, decide on the terms of the deal, whether it'll be a quick trade or is it going to be a long-term trade lasting for more than 1 hour. Typically with the NFP and the CPI numbers, if I can get out within the first 15 minutes, I would get out. And we've been lucky in that in the past few months we've been doing the NFP and the CPI. We actually got a few trades that lasted maybe only a minute up to 3 minutes, right? The sooner the better if we can get out and be done with it. That's how it should be done, right? That's what we're doing during the live sessions. But you might have a different idea about it. You might actually want to use that volatility for the news trading to open up a swing position. That could happen as well. So you need to figure out what you want to do. Is it going to be short term? Is it going to be a longer term? All right. So this, I would highly recommend that you screenshot what you're looking at here, because sometimes people get confused, but I'm going to give you a little bit of a hint. If you're looking at stop orders, whether it's a buy stop or whether it's a sell stop, you are looking for a resistance to be broken or a support to be broken. If you expect a resistance to be broken, you want to have your buy stop. That means if market goes up, where your stop is, which is going to be higher than the current market price, it will trigger a buy order. And this is what we call buy side. Okay. The sell stop is if you're expecting a support to break And if it breaks, you want to be in a short trade, you will place that sell stop. So think about the stop orders, even though it says stop, but it's actually not stop. When we talk about stop orders, it basically means you're expecting something to follow through. You're expecting something to go in one direction. That's when we want to use the stop orders. The limit orders, on the other hand, you can see it's reversed. So I said, screenshot this thing, look at it until you kind of figure out what it is. We're going to be doing some examples, but it's still good to understand and get familiar with the difference between the two orders. But once you figure it out, it'll stay with you for the rest of your life. Trust me. Okay. Now, for example, if you're looking at a resistance and you think that market is actually going to fail at that resistance, so you want to get in as close to that resistance as possible, right? That's just a logical way because you're expecting a certain level to be a resistance. If you place your order at that or near the resistance, let me see, stop losses are actually going to be smaller. This is where you want to use a sell limit order. So this is order placed above the current market price, and you expect price to fall back down. On the other hand, if you're looking at a support and you expect market to drop down first and then bounce off a support level, then you use the buy limit. Okay, the buy limit are going to be your order placed below the current market price when you expect price to rise up. Okay. All right. So this is the buy stop and the sell stop strategy. This is what we call the straddle strategy, and this is something that we actually will use during the CPI trade. This is also something that we will use during the NFP trade. And we basically want to look at that accumulation phase. You can see from the example here how the market is basically just moving in a range, right? This range is what we call the corridor of volatility. You want to create a buy stop above market price, and you want to create a sell stop below the market price. We don't know what that news is going to be, but typically it will go in one direction within the first few minutes. And that's where we want to have the buy stop, and that's where we want to have the sell stop. Because if you have that order in, it will automatically triggers it without you having to trigger it manually. Because manual trades during news trading could be a little bit slow. Okay, so this is where we want to have the buy stop and the sell stop. Whichever side breaks, we want to be in that trade. Okay, so for example, on this one here, the buy trade got triggered because it went above that corridor of volatility. It activated the buy stop. You are in the trade. When one of your trades is triggered, you will need to cancel the other orders. This is basically what we did during the NFP and the CPI as well. Okay, so there's only going to be one order. We do not want to have two pending orders. Okay, so this one here, the buy trade got triggered. You need to close out, or you need to cancel your sell orders. Okay. And it runs up. This is where you start placing your stop losses and your take profit level. And if you see a significant gain in the market, you can move your stop loss to break even, for example. And that would allow you to have a risk-free trade, right? If you're able to move a stop loss to a break even level, you basically have a risk-free trade. So think about doing that. Okay. So back again, the development phases, they're still there. So this one here is accumulation. This, during the breakout, is participation. And if you try to enter here, this is going to be your distribution phase. Okay? So we want to be when price breaks out. Either you already have a position before that trade by having this accumulation period, or you want to trade it during the breakout. This is the participation phase. And this is going to be your distribution phase, which is where you actually want to exit the trade. Okay? So, let's practice, and let me just load up the Octa FX side. Dollar Canadian, for example, this one here is actually pretty interesting. So let me just assume there's going to be a news release that's going to impact the US dollar as well as the Canadian dollar. Number one, you want to create a little bit of a range. You need to figure out where the support is actually going to be. So by looking at the current level, this is on the 50-minute time frame. So I'm looking at trading this on a shorter time frame. You will want to look at this range, right? This is going to be the range for the market. This is going to be your corridor of volatility. Now, if you're thinking of, trading this, you can actually right click on your chart, and there's a button for trading. You can actually just do that off the chart as well. I'll show you the manual way, but this is the fastest way to do that. Okay, so I'm going to create a sell stop. I'm going to right click somewhere below where market price is. We can adjust it manually, right? So I created a sell stop just below the 1.3780, and I want to create a buy stop just above 1.38, just above where the range is for the market right now. Okay, so this we have two orders here. You can see that we have two orders here. If the market breaks to the downside, it will actually trigger my order, right? If the market goes there, my sales order is actually going to get triggered. But this is how you place a sell stop order. So let's get rid of this. Okay, I'm going to get rid of it, and I'll show you the manual way to do it. You can go to new order, right? It's going to open up. You can set your volume. Make sure you set your volume, because sometimes when people do quick trades like this, they forgot to set their volumes, and they might open up at a wrong lot size. For example, let's do a mini lot, for example. So I'm going to go 0.1. So I'll need to adjust that at 0.1. I'm going to change this to pending order. Okay, and I want to create a sell stop. I want to create a sell stop at what price? I'm thinking maybe 1.3780. That's below the current range, right? I can also set my stop loss as well at the same time if you want to. You can do that here. Let's say I want to have my stop loss at, I don't want it to be too far. Maybe I'll go 1.3790. All right. And my take profit, I'll probably like 1.3750. Yeah. I can place it there. It's going to create that order for me. I've got my take profit. I've got my stop loss. You can actually manually do that. But typically, I would probably just right click on the chart. Sometimes we just don't have the time and we want to do it really quickly. And obviously, we can just adjust it where we want it. So yeah, that's how we create a buy stop and a sell stop orders. Okay, so the other one is a limit and a limit order. This is going to be a buy limit and your sell limit strategy. So if we take a look at the local previous high, and you basically need to place your sell limit orders here. If you really want to understand what it is, please join the upcoming webinar that we're going to start on the 28th of November. We'll actually go through this in a lot of details, but I'll spill a little bit tonight, and we'll use a tool called fair value gap. And this is where we want to have our limit orders, right? So we need to understand what order blocks is. We need to understand if there's a certain level that's going to be significantly holding the market from further progress. That's where we want to create our limit orders. Okay, so the market is down here, and I don't want to sell the market now. I want it to go back to the red area, the red zone where the resistance is going to be, and I want to place my order closer to that area. So I'm actually going to be using a sell limit order right around that area. Okay, so this is basically what happens. The order was triggered, market pulled back to that area. This is triggered from a news release, and you can see what happens there after it touches that resistance area. It slams to the downside. Okay, this is going to be a little bit more complex, and this is the reason why I have been a little bit hesitant in explaining this in a lot more details in the past few months, because this is a harder concept to get, and you kind of need to understand some of the stuff that you need to look at. This is not like a buy stop strategy where it can just break out of the range and you be done with it. This takes technical knowledge. You really need to understand what the price action is and the logic behind the expectation that the market is actually going to fail, for example. Okay, but tonight, since we are going to be running that new webinar at the end of the month, we'll go through some of the stuff as an example here. Okay, so let's practice on the limit orders. Just get just get a hang of the limit orders. Maybe because that's where price was failing before. So I want to create a very specific limit order, I want to create a sell limit. Okay, so a sell limit is I want to see price goes to the upside and it fails. Okay, so I want to see that happen. So because this is just an example, we'll go through the practice later on the Euro USD and gold, but just to tell you, if I'm expecting, for example, price to fail at maybe about 78.6%, I'm going to create a sell limit order. Okay, that means if price goes up to 78.6% and fail, I want to be in a short position. And the reason behind this is pretty simple. It has a smaller risk and a much bigger risk reward ratio, because I could have my stop loss just over there. Okay, I could have my stop loss at just about 10 pips. Sorry, this is the sell limit. Sorry. All right, let me just adjust it again. This is the sell limit. Okay, and I can have my stop loss a little bit closer. For example, I want to have my stop loss maybe about 1.38. Okay, and I want to have my take profit at the lower end of the range at 1.3782. You see what happens here? I have a smaller risk. This is my risk compared to the potential gain that I could get, which is this. You can see the difference here. And this strategy, it's pretty valid, but you need to really understand what's going on first, because you can't just randomly create a limit orders. You need to understand where the market is trending. If it's trending down and you expect price to pull back or correct itself for a little bit and continue the downtrend, it's logical. You're not really going against the trend, even though you expect the market to pull back. The logic would be, oh, the market is going up, why would I want to sell, right? That's the kind of thing with limit orders. So you still need to have a little bit of an understanding into the technical analysis to kind of figure out the limit orders. Is this the setup for tonight? Oh no, the dollar Canadian is just an example. I'll give you a setup on gold and the euro, right? Because news trading, we can have that position before news, right? That's the ideal way. If we look at some of the technical analysis in the market, and if you see an opportunity in the market, I would say, why not? Okay. Yeah, the SMC is actually going to start on the 28th. It will be a 5-day event. I only have the schedule for the 3 events. I think it should continue on straight, but it will be every day, so you'll get what you need. And it should be enough basic information to get you started with the SMC, because once you start going into the SMC, you're opening up a can of worms. So I'm filtering it out for you. I'm just going to show you the good stuff, right, just to get you started. Okay, cool. All right. Is there something to trade on the dollar Canadian? Actually, there is, but let me just switch to trading view and bring you on the Euro USD. We basically just got a bounce from the FVG, or the fair value gap. Okay, but right now on the Euro USD, because we just bounced off the fair value gap, I kind of missed out a little bit, but it's okay. I want to go on to. We're expecting this to be a little bit of a support to build up on the Euro USD. But if we go on to the small time frame, on the 50-minute time frame, right, there are a few things that could happen here. And if we go on to the 50-minute time frame, would that give us enough time to figure out what's going on in the market? I would guess so. Now, there could be a little bit of an order block building up around here. Okay, so that could be where we anticipate a little bit of a sell limit. Maybe we would actually be looking at price failing at about 1.07, all right? Because 1.07 is the psychological price level. What if price goes up to 1.07 and then move back down? We're anticipating something, okay? Now, can we anticipate that from the average hourly earnings, initial jobless claims tonight? let's take a look at the initial jobless claims number. The market is expecting a higher initial jobless claims number. This is actually going to be negative for the US economy, but the market might not react to it as well, because we kind of need to figure out if the previous number get revised up or down. Okay, so this is actually going to get released at 8:30. Now, if we take a look at the continuing jobless claims, this is also going to be bad, because the market is expecting a higher jobless claims. The higher the jobless claims, the worse it is for the economy, because there's a lot more people that's being unemployed and claiming unemployment benefits. Okay, those are actually the initial jobless claims numbers. You're looking at the number of people that's actually claiming unemployment benefits. Okay, so that's a little bit of the news tonight. But could it create that movement in the market? So let's take a look at the Euro USD. I think we are done for this one. I'm actually going to clear this up. We did actually have a little bit of a short trade last week from one of the webinars, and we are quite done with that. So I'm keeping 1.07, and I'll probably not look at 1.0725. So I'll just get rid of that. Now I want you guys to focus on price tonight. There's something in here that has just happened, and there's actually a little bit of a fair value gap on the hourly time frame, which is there. Okay, so this, we're actually expecting a little bit of resistance to happen on the Euro USD. So can we create a little bit of a limit order? I would say so, yes, but I want that limit order because we're so close to 1.07. I actually want that limit order to be closer to 1.07. So I'm actually going to go on to the MetaTrader, and let's go into Euro USD, and I want to create a little bit of a limit order at 1.07, which is here. I'm going to create a little bit of a sell limit at 1.07. Okay, because I expect price to maybe fail at 1.07. And the reason for that is we actually do have that level as a support here. You can see where it's been clustering for a while on the hourly time frame. It's staying up there, but it kind of failed. Now, because it is such a small range, oops, let me try to grab that rectangle there. Okay, because it's such a small range, I would classify this area here to be a potential resistance for the Euro USD. So I expect the Euro USD to not be able to surpass 1.0715. Okay, so I would prefer to create maybe a limit order at 1.07, or maybe a little bit higher at 1.0715. I might have two, I don't know. Okay, now let's look at where we should be targeting this. We are going to be looking at this low here. This low is actually going to be here. This is what we call the potential sell side liquidity. Okay, there is actually going to be a little bit of support there. That's located at about 1.0666, but we are taking a look at the potential for this one to move a little bit lower. Okay, so this is where I want to have my take profit level. So I want to have my take profit level, and I'm going to adjust it here to 1.0660. And I want to have my stop loss just above 1.0715, because it's a limit order. If it gets triggered, my risk is actually going to be smaller than my reward, because I'm not having a lot of risk in the market. Order is going to get triggered at 1.07 and 1.0715, and this is the order for 1.07. Okay, so I want to have this at maybe 1.0720. Okay, all right. So that's that. That's my setup for tonight. I expect a potential for price to kind of fail at 1.07 if I get it wrong. And if I get it wrong, my stop loss is not huge, because it's actually just going to be about 20 pips, 19 pips in terms of stop loss. The potential gain that I could have from this trade, if it hits, it's basically about 40. So I'm actually on a 1 to 2 risk reward ratio on the Euro USD here. So pretty happy with this one. So I expect a little bit of a failure, maybe at 1.07 to 1.0715. Okay, if it goes above 1.07 or 1.0715, no big deal, because we're not opening up a position with a huge risk, and you should not open a limit orders with a huge risk. The idea and the logic behind a limit order is you want price to approach that resistance and fail. Okay, that's the logic. You want to get a better pricing by waiting. Okay, that's how it works with the limit order. You're not rushing into the market. If I set the order right now, it might not trigger until the next 40 minutes, right? Because it's not the news release right now. But obviously, if you want to use the buy stop and the sell stop strategy as well, you can do that for the news release, which is going to get released in about 40 minutes time. Are we having live trading sessions for the upcoming US news? No, my session is actually going to end in about 9 minutes time. The news is actually going to get released in 40 minutes time. I hope that answers that. Okay, so this is a little bit on a limit order as well. Let's take a look at another example of a limit order that we can actually look at. It's actually not gold. It's actually on the dollar Japanese yen. But this is gold, and this is what you guys are going to be learning on the 28th of November, where to label all this stuff. We have actually been labeling this for a while now, and I can give you a little bit of an example on gold. No, this one here. This is actually going to be our case study for gold, right? That's going to be a little bit of an order block, fair value gap. You can see what happens here. Market hits fair value gap, and it kind of, I didn't place a limit order, obviously, but this is what we anticipate from a limit order, right? Take a look at this one here, where we see the market goes down, and then you expect it to pull back to that potential resistance, and the market continues to go down. This over here is where you want to have your limit orders. Okay, this is where you want to have your limit orders. This is where you want to sell. Okay, you don't want to sell here, because if you sell here, the market pulls back, and the pullback is quite significant, because judging by this, it's still going to be about $7 pullback. So you might as well just wait for 1, 2, 3, 4, 5 hours time. It pulls back $7 and place you in a better position to actually short the market. Okay, so that's the reason why we want to use a limit orders. Okay, cool. So you can also trade this after the news release. The news is released. So for example, the news is going to get released at 8:30. You're not comfortable having a position before the news is released. You can wait until the news get released, process that information, and then place a position after that. Typically, when you trade after news releases, we don't use the stop orders anymore. You will use the limit orders after news release, but you typically don't use the stop orders. You will use the limit orders, or you will actually enter at market. But you can still trade after the news gets released, right? Once all the volatility goes down, you can start opening up your position, because that volatility will create a little bit of a technical outlook for you to figure out whether you should actually trade or not as well. Okay? All right. So let's do a quick test before we wrap up for today. I'm going to ask you 3 questions, and I want you to please participate. Okay, because I've been doing it in the past 3 months and no one actually wants to answer my question. We need you to answer this so you get a better understanding of what we just talked about. And the webinar series that we are actually going to be doing from the 28th onwards is going to be interactive. So get used to asking questions or answering questions. Okay, so I'm going to ask you the questions. All news can be divided into 2 categories. What are they? And what are the type of orders that is most often used in news trading? What types of pending orders have you learned? And when should each type be used in trading? Okay, so please, if you can answer that, it'll be great. well, I'll go through and see if there's any questions regarding tonight. Good. How do we know if the market has already been priced in or not? Okay, if, for example, we have that information where the consensus is published. For example, the RBA is a really good example, and I actually mentioned it on the Outlook on Monday that market could actually be pricing in for that because we know the RBA will actually need to hike interest rate to contain the rising inflation again in Australia. So that's kind of expected. When we have a little bit of an expectation in the market and you see the Australian dollar recovered before, so I can show you the Aussie USD here, right? So leading up to the news release, this is the week before that, okay? You actually see the Australian dollar rally up. We already have that information that the RBA is actually going to step in, all right? So this is market pricing in for the rate hike. So when we talk about the market pricing in, you can actually see that the market has already started moving in the same direction if you assume that there is an interest rate hike from the RBA. So that was a given. And then what happens here is that it kind of slowed down a little bit. So that's where we kind of anticipate a potential failure at around 65 cents. That was the view on Australian dollar this week. Okay, so let me bring it up. So this was actually in the Outlook. There was a little bit of resistance that was building up, and we anticipate that there's going to be a potential rejection from 65 cents. And the reason why we look at the timing in the market. Market rallied up to 65 cents on Friday. The RBA is going to act on Tuesday. You can see what happens here. There was a little bit of an adjustment that happens on Monday. Okay, and that's when we publish the Outlook as well. So we know, we did know, we can assume that there was a little bit of a pricing into the market, and it could fail if the RBA does not hike by more than what the market is expecting. Because the market is expecting 25 basis points, and we know the current situation doesn't allow for RBA to hike by 50 basis points. There's a high potential it will actually fail. And the reason why we can assume that is because it is at a key level. It is at a resistance, and it's also at a little bit of an order block. It's at 65 cents. So there's going to be an order block there. We already identified the order block, and the reason I didn't talk about that during the Outlook, because no point talking about the order blocks, because I actually do not like to use the word order blocks, but since we're actually going to be doing that webinar on the 28th, might as well use it. Those are actually order blocks. And that's where we can actually assume that market could actually do the opposite if the RBA doesn't surprise more. Okay? Cool. All right, so let's get back to the questions. Hopefully you guys are answering this. So all news can be divided into two categories. What are they? Oh, now that's good. Urgent, good news and bad news. Okay, I'm not going to take that. Urgent and scheduled, yes. Event and unexpected news, yes. Hot unexpected news. Okay, unexpected periodic. All right, that's great. That's what it is, unexpected and periodic. Good job, Daniel. What type of orders is most often used in niche trading? Stop orders, all right? Buy stop and sell stop, yes. Stop orders are actually used a lot more in news trading. And the third one, what type of pending orders do you know? Some answer stops and limits. Stop and limits orders. Yeah, that's great. Stop order for breakout strategy. You use stop order for breakout strategy. You use limit order for expecting a pullback and continuing the trend. That's correct. Okay. So those are the type of strategies that we want to be using it and when to use it. Wilvin gave out a really good answer there. Stop order for breakout strategy. Limit order for expecting a pullback and continuing the initial trend. Okay. Cool. All right. We need to kind of wrap this up because we are at the end of the session. Again, this is the promo code that you should be using. It's non-farm 2023. This is to double your deposit bonus. Can you give us a little bit of a setup for gold? I actually gave out a little bit of an info on gold, but yeah, it'll actually be negative. So let me just give you a little bit of a guidance on that one here. At this point in time for gold, we do not expect a lot of positive gains on gold. There's a lot of resistance on gold, and feel free to screenshot this for gold. In fact, for gold, I think it's already started moving, because we already kind of retraced a little bit. Right now, we are breaking lower for gold. Might have a little bit of potential bounce here, but at this point in time, this is actually going to be a little bit tough. There's a lot of resistance to the upside. Price could actually fail at 1950. And the reason why we need to look at that is, if you've been following the outlook this week, I've already mentioned it, that gold has a high potential to actually fail this week. So yeah, those that watch the outlook should get that idea. We are now in that red zone here. This is around 1950, 1940. If you expect intraday movement, we should expect a little bit of a support coming in about $5 price. We should expect a little bit of a bounce. But at this pricing, there's a lot of momentum left to go. This can easily go break below 1940 and potentially go to about 1930, where we might actually find a little bit more of a significant support for gold. Okay, so let's go back. The code that you can use is non-farm 2023. This is to double your deposit bonus. So you should open the Octa trading apps, or visit the official website. Go to your profile, find the promo code section in the menu, enter the promo code and press activate. Make sure you do this before you deposit into your account to get the bonus. Okay, so it's there, it's free, might as well use it. Okay, cool. We already did the Q&A for tonight. What's next? We are going to have our next webinar on the 14th. This is going to be a live trade session. We are actually going to be trading the inflation live, but we will also discuss about what that inflation rate is. You know, what are we looking at for? What are we looking out for? What's the CPI? What's the PPI? What's the core inflation? And then we'll do that live trade after we go through some of the theories. Okay, so this is going to be on the 14th, which is going to be on Tuesday. Sorry, I'm not just looking there. I'm looking at my calendar, which is on my desk here. On the 14th, we are going to be doing our live CPI trade. And mark this on your calendar, or you can subscribe to Octa broker channel. Click on the notification icon. We're actually going to be doing an SMC session in English, and I believe we have not done so as of yet. Okay, so that session is actually going to be on the 28th. The webinar is actually going to start on the 28th of November 2023. So I expect to see a lot of you guys in that session. Okay. Could we have maybe the setup for pivots sometime soon? Okay. Pivots. You mean a session on pivots? Yeah, we will take that into consideration. Okay, anyway, I'll see you guys on Tuesday for the live CPI. So good luck with your trades. Have a fantastic weekend. Stay safe. And I'll see you next week.